Is the Fed crypto pump coming? Today we'll break it down for you, get into the weeds. I think you're going to love it. My name is Paul Barron. Welcome back into the show. Let's go over to our partner today, and that is Salt Lending. If you guys are looking to try to take advantage of a crypto pump, one of the things you can do is go out and actually get a loan on your Bitcoins. And this is the way wealthy people do it, guys. You never sell your assets, you just loan against them. So you can unlock a lot of potential wealth with your Bitcoin. And one thing they have over at Salt Lending is a thing called Salt Shield. It's the no liquidation solution, and it's brand new. You guys, of course, can use our link. It's going to help you learn a little bit more, whether you do it as a personal unlock for wealth or as a business if you hold Bitcoin. All of that is available over at saltlending.com. Check the link down below. It does help the channel. All right, a couple of points I want to hit on today. One of the headlines, U.S. Federal Reserve right here to hold a conference which is going to focus on stablecoins, tokenization. Point is you've got the Fed now involved into all of this. Couple of points within this. This is going to take place October 21st. It's going to bring together a range of parties to discuss and how to innovate and improve payment system. Interesting. I wonder who's going to be there, because I anticipate we're going to probably see companies like Ripple, others that will show up. Payments innovation, discussions around stablecoin business models, tokenization, financial products and services, which are really going to be, I think, maybe a carry along once we start to see the Clarity Act come through, that will start to, I think, unlock a lot of companies' innovation around this. So it is, and I would agree, this is definitely going to shape the future of payments going forward. So I'm looking forward to that. And interesting, like the conference is going to be happening there from the Fed. Other good news is that PayPal is now enabling crypto for 650 million users. That's a big deal, because this will really start to employ a lot of features. One of the ones that I think that is cool is this one right here, where shoppers can actually use your Coinbase wallet, your MetaMask, your Binance, whichever, or even Phantom. And you're going to be able to do that without actually transferring funds into PayPal. So remember, a PayPal right now, if you make a payment, you either have to put dollars in there from your bank account. It takes time for it. Most of the time they'll give you credit for it. This is going to be able to go directly. Imagine it's almost like having Plaid tied to your bank account. This is going into your crypto wallet, so you can actually pay with USDC directly from your crypto wallets. That is a skip in terms of a hack for payments, and I think this will open up a lot of opportunity for people to understand, hey, this is the future, guys, which will bring in retail, and retail will, of course, start to change a lot in terms of adoption, which I anticipate is coming. And is 2026 going to be the year? I think so. I think it's going to be the year that we start to see true adoption at the business class side for crypto. Other things you got to look at right now is the fear and greed, holding it at 42 on the CoinMarketCap. One thing to look at here is, did we get a reset? Because remember, we pulled back here. This was back in early April. And then, of course, we had the skyrocket of the markets. We've been holding somewhat with a fairly high position on both Bitcoin and Ethereum. And now, of course, this most recent dive back down here to 42. Bitcoin price hovering at around, at that time, was around 108. Now, of course, we're hovering above 111, going into 112. So is this the nearest bottom for what we could see on the fear and greed? And does this mean that we are going to start nearing into an altcoin season? A lot of what we're going to be seeing, I think, with the Fed going forward will determine that. One thing also that you have to kind of consider is what's happening in the gold market. Here's KBEC kind of hitting on this. The S&P 500 is one of the strongest bull runs in decades, up 1,650 points in under 5 months. But meanwhile, gold's year-to-date returns just hit 37%. That's plus 37%. That's 4x more than the S&P 500 year-to-date. So that in itself, why is gold kind of pushing it? I think what we're seeing is rotational models. And this has been something we saw gold break out previously. Right behind it came Bitcoin on a market tear. That's a rotational model, and from that it goes into other assets. Then we saw Ethereum run a market tear up to 5K. This is, I think, where we are right now, maybe in this next leg up, and I think gold again is going to be one of the key allocators to possibly market rotation. Investors right now piling into gold and silver like never before. Holdings now in the gold ETF hit a record 2,900 tons in August. That's the largest ever. Stockpile risen by 310 tons. Same time total holdings in silver ETF reached 25,000 tons. So both these assets continuing to hold very good. So good for gold and silver, and I think in the long run it starts to play into digital assets. And this is the thing that everybody needs to understand. Assets are the only potential hack to being able to kind of get into that American dream again. And it's what you should be looking at, no matter what asset you're thinking about. Digital assets, I just think, are going to be the ones going forward. So are we going to have a bad September? Everybody's kind of looking at this. It's in the past, it's been a little bit loose in terms of September performance. I think all of that is going to change, though. But I want to play a clip for you, and then I'll give you some more. Take a look.
When you enter September, which is notoriously known as a weak month, when you enter it with a very strong trend, it's actually not that weak. If anything, it's more like a coin toss.
Yeah.
And I think importantly, when you consider what has preceded this month, as you know, the leadership is not what you would expect if we were about to fall off a cliff here. The banks are good, discretionary is pretty good, global markets are generally quite good, so it's hard to get too bearish here.
What if it's all, not all, but some of it's at least running on false promises? Tariffs aren't going to have any impact on anything, dramatically enough to change the story. And what happens if that ends up being incorrect?
I think one of the most dangerous things in this business is to put your own intuition over the markets. And the market, I think, has been telling us loud and clear for months and months and months that the impact of tariffs is not delayed, but just not happening. I think the consumer discretionary stocks are really emphasizing that point, with autos and home builders and retail acting as firm as they do.
How can there be no impact whatsoever? I mean, I don't understand how that's the case. Somebody's eating the cost, whether the company's eating it or the people are eating it.
Well, so if the economy's going to weaken here, Scott, I would expect to see credit deteriorate. Has not happened. I would expect to see discretionary underperform staples. That is not happening as well. And particularly the countries that have been in the crosshairs, whether that's China or EU or even Japan weakened, haven't had that either. So I'm not saying these things can't matter at some day in the future, but if you're looking to the market for a read today on how it appreciates this weakness we've seen in bonds, I think we're okay.
All right, so some people would look at that and say, okay, yes, those indicators have been pretty solid in terms of the overall economy. Real estate out, kind of a little bit of an outlier. Again, this is all driven by what has been self-inflicted, I believe, and that is coming from the Fed, not too late, Powell, and what we're dealing with of not really getting an interest rate cut to kind of feed into this in terms of the market growth, especially in some of these sectors that are really struggling. Tariffs, I'm not sure yet, because remember, there's a lot of these companies had ridiculous earnings that have been putting them in a position to where they could fade some of the heat. It is possible that I think a lot of companies could do that. Now, retail, food service, some of those companies, a little bit less likely. There is an uptick in bankruptcies, but I think that's all because of the fact that in many cases, businesses that normally would have been bailed out can no longer be bailed out because the interest rates are too high now. And when I say bailed out, meaning they could go to a credit instrument, get very low cost loans, be able to sustain their business going forward in a rough patch. That is not necessarily the case right now, which is why I think we're seeing a rise. So again, a rise kind of in essence being driven by the fact that the low cost money is no longer there. You look at Treasury Secretary Scott Bessent, he's kind of hitting on the point that in August, we booked over $31 billion in terms of revenues coming in off tariffs. Again, this is money coming into the coffers. Now, hopefully this starts to reduce the debt. If anything, there are opportunities, I think, that the American people could hopefully benefit from this. But I think the big factor is how does this play out for companies going down the road? Because that's a factor that I think still hasn't been identified. U.S. Treasury bonds have been on a drawdown for 61 months. This is the longest period in history. This is a bit of a concern, but again, it goes back to the point of understanding where to look at investment opportunities. Now, I want to go to a clip real quick. This next clip will get into the fact that Trump is now going head-to-head with Supreme Court in trying to get these tariffs imposed. Take a look.
And now it's going to the Supreme Court. Now, we're going to be asking for early admittance. We're going tomorrow, and we're going to ask for an expedited ruling because, when you look at the stock market's down today, the stock market's down because of that, because the stock market needs the tariffs. They want the tariffs. If you look at AI, all of those, all of that money that's going to be invested, trillions and trillions of dollars, the biggest thing, bigger than the internet, I suspect. It's the internet plus 3 or 4 other things combined. We are leading very substantially with AI. we're leading because of tariffs. We're leading because of talent, and this is where they'd like to be. But without the tariffs, we wouldn't have a chance because we wouldn't be able to protect those investments of the companies coming in. So if you took away tariffs, we could end up being a third world country.
All right, I don't know that I agree with that. I do think, though, that Trump is going to get his way, and in the essence that there's no Supreme Court that's going to overturn tariffs, because that's an instrument that has always been in government for the United States to utilize. The thing that really plays into this is how is this going to play out on the Fed potential rate cuts in September. Here, of course, is Fed Governor Waller saying he is facing, or he favors, multiple interest rate cuts coming in the next few months. And I think the point that a lot of people are looking at is how many do we get? Here is Waller talking about that. Take a look.
Your view, is it one cut and then many more? Or how do you game things out over the next several months?
Well, I've been clear that I think we should be cutting at the next meeting. The labor market has come in much softer. But we were getting all this anecdotal evidence at the time saying no hiring, no firing, firms are laying off, rates were going up for new entrants. AI was potentially causing problems. So all that soft data, ADP had big negative numbers. So all that data didn't seem to match up with what the BLS was putting out. And that's kind of where I felt like the BLS numbers have got to be off in some way. And then we found out in August that they really were. So I would say over the next 3 to 6 months, we could see multiple cuts coming in. Whether it's like every meeting, we'll have to wait and see what the data says.
All right, so 3 to 6 months down the road, multiple cuts. If that is the case, then I anticipate we will see a more liquid market starting to come in, meaning we're going to start to see more injected capital into the space, whether that goes into digital assets, into the treasuries, possibly into securities, or even gold and silver. Point is it will heat up the market in general. The one thing that I am a little bit concerned about, of course, has always been this jobs balance that we're trying to get under. And this is the thing that could actually throw a kink into things, because it's possible that Powell is too late on this. If you look at the U.S. job openings now versus unemployment, this is the highest that we've seen in quite some time. In fact, it's the first time that we saw it flip, the number of unemployed people versus what's available in terms of job openings. You can kind of see this. Now, throw that out, which was COVID, and then, of course, where we are right now. This is the declining situation right now in terms of job openings that I have been shouting that this is the problem going forward. And if we don't see an adjustment, and again, I think it's too late now. Yes, it will eventually make its way into the business community, but it's going to take months, if not over a year, for that to really take place in terms of businesses to be confident to where they can go higher again. If you look at other central banks out here, Poland has now cut rates for a third time this year, another quarter basis points down to 4.75. I anticipate we'll see a lot more cutting rates as well around the world. But again, the United States still sitting very hard on expensive money right now. The Polymarket holding on the Fed decision is still very high, 86% right now, that we do get a Fed rate cut in September. So this could be a quarter basis points. Question is, will he surprise the market with a 50? Or do you think we'll get a quarter and then do we get a pause or a continuation of rate cuts? Let me know in the comments down below. If you guys are not subscribed to the channel, you should do that right now. Get in, subscribe, and of course, we do a lot, of coverage here on the show that I think you guys need to really pay attention to in terms of where the markets are going. Other things that are happening is Polymarket now has the green light to launch in the U.S. And this could be huge, because when you look at that happening, the likelihood is that could also mean a launch of a token. Hopefully Shane is going to get things going there. But remember, there's an interesting situation. Polymarket, trying to get in the U.S., and then all of a sudden Eric Trump, he goes on there as an advisor. Next thing you know, looks like they get the green light in the United States. I know that looks and feels a little under the table, but I think if you look at businesses in general, the whole entire economy around how businesses are done, those are the kind of things that happen out there of how businesses get regulations passed, how they go in and get markets opened up for them, all those kind of things. It's who you know in business. And the good thing is that digital assets might actually be starting to learn from traditional economics as to how to do this. All right, I do want to thank our sponsor today, and that's iTrust Capital. talking about gold. You guys can get into gold and silver over in your IRA, and you can do this both on a crypto IRA. You can set it up as a gold and silver IRA, all of it available over on iTrust Capital. And the nice thing about this with iTrust is it is a place where a lot of people continue to open accounts over there, over 200,000. And one of the things you can do is get a $100 funding reward just by using our link. So use that. That kind of gets you going. All right, let's move over to kind of this next evolution around stocks, tokenized stocks, and what that's going to look like. Here, of course, is ONDO talking about this. Wall Street 2.0 now here. And global markets now live. This means that we're going to see tokenized securities out there. This is now coming on Ethereum, which we've anticipated would be happening. It is now happening. That's a good thing. It will start to put more pressure, I think, here in the United States to get tokenized securities launched. And if you look at this one right here, Galaxy and Superstate now launching the GLXY tokenized stock available. And these are public shares now available on Solana. So that in itself is just more good news, I think, for blockchain, tokenized treasuries, tokenized stocks, what we're seeing in the place of ETFs moving into the market. The point is there's a lot of bullish indicators that are very good for the market in general. So much that Tom Lee is now taking a new look at Ethereum and gives us a new potential all-time high. Take a look at what he said.
On the left side is Bitcoin price levels, and then going across are various levels of the Ethereum to Bitcoin ratio. Our year-end target, this is from the Fundstrat side, for Bitcoin is $250,000. And here's the 2021 high. And as you can see, at a $250,000 Bitcoin, you get to somewhere between $12,000 and $22,000 value per Ethereum token. If you look at the replacement cost of payment rails and the banking system, that gets you to an implied value of Ethereum of around $60,000. I also asked Fundstrat's Mark Newton for his technical take on Ethereum, and he thinks Ethereum could reach 9,000 by early January. According to him, Ethereum could reach 9,000 in late January, but he also believes that in September, Ethereum could be set to reach somewhere between 5,500 or so.
All right, so you can kind of see very, very bullish on ETH in general. And if you think about that, you got to consider shorts, and they're still out there. 8 billion in Ethereum shorts now are set to be liquidated when we cross 5,200. That will be a critical point moving forward. I think it also will push sentiment data into the stratosphere on Ethereum. That could be the breakout point. So that's the one we are watching very, very closely. Other things you got to look at is the stablecoin inflows on ETH, currently leading with the largest 24-hour stablecoin inflow across all blockchains. This is a major sign of investor interest, and you can kind of see it right there. ETH leading the way. Stablecoins, we already know, are now starting to get implemented into all sorts of business architecture, and I think this is just the next phase. But I don't think we are really in an adoption curve just yet. I think it's still very early around all of these. So you think we're there yet? Well, it's going to take some mainstream movement. One of the things that could move mainstream is this right here, and that is that there's a rumor Tom Lee could be going on Joe Rogan. If that were to happen, let me know in the comments what you think would happen to Ethereum. If Rogan and Lee get together and he gets to talk about the whole concept of what Tom Lee is pitching, which is really the replacement of the finance system on Wall Street. It is the Wall Street token. And whether or not Rogan is going to buy that, if he does, then you could see a ridiculous response, because this is going to open up to a lot of people that don't even know about Ethereum, guys. And I know you may think that's crazy, Paul. Everybody knows about it. No, there's everyday people out there are just now uncovering what's going on in digital assets. They're just now starting to understand what a stablecoin is. I talked to two business leaders this morning. It was mind-boggling how little they knew about what was happening in DC around really what is a transition in our financial system. And these are very, very smart people. So it's a big one. Charlie Bilello hits on it right here. The American dream is on life support. Only 25% of Americans say they have a good chance of improving their standard of living, the lowest in surveys since '87. 3 and 4 don't believe the next generation will be better off. I'm going to tell you this, guys. You will be better off. And I'm going to tell you why. The American dream is not dead. The American dream has just shifted. And it shifted from what was, unfortunately, real estate in the past to digital assets. And digital assets have a whole slew and variety of concepts, but this is all coming to a head in one place, and I hope that you guys are paying attention. If you're not subscribed to the show, I want you to just take a minute, do that right now, because that's the one thing we talk about here is really this major transformation of wealth. And that's what we're dealing with today in what's happening, not only on the regulatory front, what's happening in the cultural front, what's happening in a demographic shift, all of that one time is now going on right here, which is why you see a lot of people feeling like, you know, I'll never make it out. Yes, you will. You just have to understand there are ways to do it. And if it's just a trickle-in amount of going into digital assets, that's where you start. Hopefully you're doing that. All right, if you get in, the way you can start, get in on the Diamond Circle. It's free. And what we do over there is we send out a couple emails a month to you. We give you our thesis on a lot of the research that we do here on the show, but also give you some more insights into even my own personal strategies on how I'm doing things. That's called the Barron Market Edge. Email, you get it for free. Just join the link down below. And of course, follow me on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.